Okay.
Testing. Hey guys, hopefully you can hear me. I was having some audio issues there again. Same thing with this wireless mic that I'm using. It's sometimes no problems whatsoever starting with my recording software, my streaming software, and then sometimes it decides to freeze on me, and so then I got to restart the stream and everything like that. So hopefully you guys can see this. Just give me a... Ooh, looks pretty blurry on my end. Let me just double check my connection here. 1 second. Just gotta double check everything here. Okay, looks good on that end. So hopefully you guys can all see this all right. I'm gonna do a quick London open trading session here and see where the markets are heading for Tuesday's trading. Kind of a muted day today. I mean, I typically don't trade Mondays, you know, for obvious reasons. It is non-farm this week, so just make sure you're careful of that. And there is some FOMC. You know what? Why don't I just actually start by, I'll just bring up the economic calendar, and I'm pretty sure you've all seen the economic calendar, but if you haven't for the week, and this is the first time seeing it, well, that's what I'm here to do. So I'm just going to take off one of those filters, apply. Okay, let's see the week here. So, good old forexfactory.com. Looking at what's happening on the week, we've got some Aussie news coming out in a couple hours here. Sorry, let's scratch that. Aussie news is coming out in about 25 minutes, so we'll have a look at Aussie. So there'll be lots of time to check that out. So I will maybe just remind me if you could in the chat just to run through Aussie quick and see if there's anything there that we could look at. There are some bank holidays going on, so obviously all the European banks, French, German, Italian bank holidays today, so the euro probably won't see a whole lot of action, and it actually kind of leads me into my next statement. I think just because of all the pound news and the manipulation on the pound last week, where they really held it in consolidation and let the euro run, it could be catch-up time now for the pound. So I'm going to talk about that here in a few minutes, but there should be some good action on it here today. There's also some Kiwi news, which is tentative, so we don't know what time that's going to come in at. Obviously sometime between 10 a.m. and 2:30. Some U.S. CAD news, and some more Kiwi news later on in the day. So that's Tuesday's trading. And again, just keep in mind, guys, obviously non-farm, I'm sure you all know that, on Friday, and then a whole bunch of FOMC stuff to cap off the week. So I would highly recommend you not trading on Friday. And, you know, Thursday there is some Euro news shaping up and some prelim numbers coming out for Thursday for the U.S., but it could be a little choppy, so just keep that in mind. Sometimes it's hit or miss, I find. Sometimes the Thursday before non-farm can consolidate and really do absolutely nothing while people are waiting for the numbers to come out. Or sometimes it can put in big ranges. So it's, you know, I say I typically don't trade Thursdays or Fridays before non-farm. But lately I've seen there's actually been a couple of nice setups on it. So I can't rule it out 100% yet. So you just kind of got to play it by ear. You got to watch the setup. If you get a really big Asian session going on, you definitely don't want to be trading those days. But you know, again, if you get these tight muted sessions where trading is just very in a tight range, that just means they're building up anticipation and building up positions for the non-farm event coming the next day. So but anyway, best days to trade so far, Tuesdays and Wednesdays of this week. hopefully you guys can hear me all right. I had that wireless headset on that gives me great audio, but I wasn't working, so I didn't want to screw around with it today, so I just turned it off. So hopefully you guys can hear me okay. I'm coming in loud and clear. If you're getting any distortion or anything, just shoot a note up into the comments here. I've got the comments page right beside me, so I'll have a look at that. And if you have any questions about any pairs that you follow or anything like that as well, by all means, shoot me up a comment, and I'll see if I can't do my best to have a look at those. All right. So let's get rolling. US dollar. Talk about that as I always start out all of these sessions. If you're just joining me for the first time, thank you very much for coming in. Check us out at f45trading.com on Twitter or on Instagram. And you can see in the top right-hand corner here. Post a whole lot of stuff. I actually just posted a fairly interesting article on Twitter related to crude oil. So you can definitely zip over to my Twitter and check that out for yourself. Just some potential forecasting coming out for crude oil. I think there's a lot of bias out there for crude to go up, and a lot of sentiment out there, which it's interesting. I've got some different opinions for crude oil, but I'll talk about that here in a few minutes. And I don't know how long you guys want to stick around for. We got a small group in here now. Typically picks up a little bit later on, but I'll probably be discussing the markets here for about an hour, maybe an hour and a half. We'll sort of see how that goes. I haven't done an hour and a half session for a while, and I think I'm about due. But if there's really nothing to talk about going forward, then I'm not going to keep you guys any longer. I'll just kind of go through my pairs that I look at, a couple of commodities, and we'll go from there. So, yeah, US dollar. So this is the monthly. Hopefully you guys can see up in the right-hand corner here. We've got the U.S. index on the monthly now. I bring this up just because I typically don't go through the monthly, but it is the start of a new month. It is May 1st. Happy May 1st, everybody, on the east coast of North America and in Europe, because it's now 12:11 a.m. So May 1st. So we're at the start of a new month and start of a new candle that's starting to form here. And you know what I'd really like to do is clean up some shrapnel on here, all but one line. But I'm going to start out on the monthly anyway here, just to kind of give you guys an idea. So obviously you can see this big bearish trend that's come through here. We all know if you're trading anything, the U.S. dollar's been in a steady decline since basically October 2016. Okay, so nothing new there. As of late, the past 3 months, however, we have started to make a slight retracement higher. Now, on the weekly and on the daily, there's some area of potential resistance that it's coming up into, where I have this blue shaded square in here. But let's just talk about that here in a minute. But let's assume now that, again, price trades from consolidation to consolidation typically. There could be another area where price on the U.S. dollar could drive higher, and I have it right here at 92.41, and that's just basically the lows right in here. You could even go up to 92.50, but that's basically just the lows of these consolidation, the small consolidation area right in here, where price spent about 1, 2, 3, 4, 5 months sort of trading in and out of. 92.50 is a fairly significant level, and we are creeping up onto that now. There are some levels on the daily and the weekly where it could offer some resistance and price may fall short of hitting that target, but if I'm looking on the monthly, that's sort of where I'm expecting price to go, and only because we have made a nice retracement in here. But if I take a fib, and this is kind of where it's going to get maybe a little bit where I might have to clean up the chart just a little bit. If you take a fib from this high, I'm going to do the bodies, basically from this high down to this low on the monthly. And you see what I was talking about, this sort of 92.50 level here. It really comes back up into that common area of retracements, where price typically likes to retrace up into anywhere from the 50% level up to the 80% retracement level, basically. And sort of right smack dab in the middle of that 92.50 level is the 72% retracement level, 62% retracement level. So very, very high levels, probability levels of price reversing in those levels. Not to mention, as I mentioned before, price does like to trade from consolidation to consolidation. So you'll see price do something like this: consolidate, it'll run down, hit new levels, consolidate again, run down again, consolidate. And typically what happens when prices reach the low point of the market, so if you look at price being overpriced up here and underpriced down here, sort of like an RSI model, you could basically say that the price is oversold and down here and it's looking to gain higher prices. Well, the first level of higher prices that price would come back up and trade up to is the next level of consolidation, which would be right into here. And that, you can see, my friends, is exactly what it's doing. So you can just barely see now this little candle right in here. This is the new monthly candle that has just started. So long story short on this, I'm expecting higher prices on the US dollar short term. I don't necessarily think that these highs are going to get taken out anytime soon. Could be wrong. They could keep jamming price up here. Maybe this is the low, because it has definitely come back down here and tagged off some of the old highs back in here. And that would be perfectly fine. You can see on the larger picture, bird's eye view of this, you know, we're talking the past 18 years of trading. Price definitely created a high way up here and has traded softer. It sat in the consolidation range for about 10 years, just a short period of time, and finally broke out of that, and another big consolidation range, dropped down, basically just taking the liquidity out underneath this area here, retrading and retesting some of these old highs again back into here, and retracing again. Now, looking at this, there are some areas where I do believe price could still come to the downside before this sort of range is traded. I think ultimately, you know, with what Trump is doing in office, and, you know, the amounts that the U.S. government is encouraging business and investment and everything else, it's just going to be a driver for the U.S. dollar to go higher. They're also increasing interest rates. You know, they're tightening supply, monetary supply. All of these factors going in, I think long term, and I mean very, very long term, we could start to see the U.S. dollar continue to run higher. Okay, just looking at this chart alone. Now, again, short term, you know, in the rest of May, maybe into June, I think we could trade higher. Longer term, towards the end of the year, I think price could roll over, because again, there is some area right down here. You see these highs in here on the monthly, and I've got a little shaded area in here that I've got down on the daily. I believe we could see price roll back over and want to tag that and further continue to soak up some of the liquidity down here, potentially. Now, what would make me wrong is if price, if price pushed through and it ran higher, you know, and you can just pretty much ignore these guys here. Sorry, now I'm just blowing everything away here. I just want to get rid of some of these lines in here. Okay, that's what I was looking at. So what would negate that theory if we fail to come down to here would be if price traded up and through this consolidation area. If we get up through here, then price will continue. It'll take out these highs here, and then we'll look for price to return back up to this consolidation area. And then from there, again, you know, we could start to test theories or prices all the way back up into these levels here, and then who knows, maybe take out these highs there. That's a very, very long, I mean, that could take 20 years to get up there. I don't know. You know, I mean, you look at it and you think the high was created in 2002 down to the low that was created in 2008. So that took 6 years to run to that, from that extreme high to that extreme low. And since then, it's taken another 10 years just to get up price marginally above this small consolidation area here. So when I say 20 years to get all the way back up here, it may not be a stretch. Maybe not 20 years from here, but maybe 20 years from this point. You know, so maybe 2030 be up here. I don't know. Anyway, I'm just spitballing. You get the idea. So, going forward, short term, I think price will push a little bit higher into the month of May. Once this range here, though, is completed and price has been satisfied up in this area, and we get some resistance, which I believe will happen, I think it could continue back lower. And if price loses really this line right here, you see this orange line that I have here, 89.55. I could make that exactly 89.55 for you guys, just in case you're looking at that saying, "Oh, it's not 89.55." It is now. So that's pretty much the middle of this consolidation range. So if price convincingly breaks down, finishes and closes underneath that line there, very good chance that price is going to go down to this blue shaded area. That would be my next target. Okay, so I know what you're saying. You're sitting there, thinking to yourself, "Wow, that's great. He's calling the market up and he's calling the market down." Yeah, at the end of the day, that's trading sometimes. You have to be prepared for both scenarios. If price trades up, okay, great. What are the levels that I'm looking at if it trades up? Where are the targets I'm looking for? Where would the entries be to get in on a move going higher? And if price goes down, same thing. What are the targets I'm looking at? How much of a range are we talking about here? Where are the entries to get in? And so on and so forth. So you have to be prepared for price to go on both directions. You have to be a very multi-directional trader. And at the end of the day, if you get locked into one position, saying, "Oh, I think this market's going higher and it's not going to go anywhere else but higher," and it starts to go lower, and you just sit on your hands because that wasn't your overall bias, well, I mean, you're wrong, so you got to come to grips with that. But you also have to be very nimble on the fly, change your tune, figure it out, and run from there. So it's best if you basically sit and look and say, okay, what are the levels on both sides? Where is price going? What are the next potential areas? And lay those out. Okay, so real simple. I don't want to spend too much more time on that, but I'm to be honest with you, I'm just waiting for London action to start to heat up here so I can actually start talking about some trades. But I figured it'd be nice to do a real bird's eye overview of the US dollar so we can kind of get some bias going forward. Down to the weekly, so there's that level. This is sort of, like I say, the line in the sand. If price on this monthly one here, sorry, not the line in the sand, this one right here, 92.41 is the level that I'm looking for price to possibly come up to if it breaks higher than the current levels that we're at right now. And I brought that up just because this line here, this 91.87, now you could even call it 91.90, that's the middle of this consolidation range. So if this consolidation, if their target and their goal is to push up through there and go higher, what will tell you that they're going to do that is them breaking this solid black line right there at 91.90. And basically 92 big figure. If they close higher than that, then you can pretty much be guaranteed they're going up to 92.40, 92.50, and who knows how much higher from there. Like I say, that's the middle of that next consolidation, or the low end of that next consolidation range. So that's what you got to be looking for, and that's what you got to be prepared on. Now just back to the weekly real quick. So again, I am looking for price to push up further. These are the two levels I'm looking for them to complete price at, and I'll watch and see what they do at these levels here. Could be sort of the perfect catalyst if non-farm news is coming out on Friday for them to just, keep pushing this thing higher and higher and higher, and then all of a sudden we come into Friday's trading and then they start slamming it down. I would definitely not rule that out. But the one good thing is, whether it's going higher or whether it's going lower, it's going to be a lot easier to dictate where price is headed because they've already made their move. So as opposed to being in this extended consolidation rate here, we've now broken out of that. So let's say they're going to run price higher. Great. We know where they're going. So all we have to do is look for shallow retracements back to logical areas in order to get in on long positions. Right? It's really that simple. That's trading. So at the end of the day, I'm going to be looking for price to potentially bounce, rebound, reject, what have you, at these levels. If it doesn't and it goes through and it starts closing higher than here, then we'll be looking for areas up in here, the highs here, and the highs potentially here. And actually on the weekly, there are two equal highs right there that could be suspect and could be targeted. And that's a very nice pink line that I'm using right there to illustrate that I can't move. Come on. You gotta love MT4 sometimes. Really do. You get the picture though. I can't grab this damn line. There it is. Nope. I typically don't swear a lot, you guys. Especially when I'm doing these live sessions. My personal life I do a little bit, but I'm real close to doing it right now because I absolutely hate the trend line functionality in MT4. I really wish I was a developer because I would develop something a hell of a lot easier to use than that. Anyway, so that's kind of what we're looking at. So you see those two equal highs up there. That would be... Fuck off. That would be something that I'd be shooting for if price were to break higher than what we're currently at right now. Okay. So that's sort of what we're looking for on the upside. Now, what could potentially happen, like I say, I'm going to be watching these two levels in here, 91.90 and 92.40. I'm going to be watching those levels to see if there's any rejection. If there is, I'd be looking for price to potentially come back down and start to retrade and test the highs of this previous consolidation area that we're in here. Okay, so that's sort of how that works. And then again, it's the same thing. If it comes down and it slams into the highs and doesn't see any rejection, then I'll be looking at the middle of this consolidation range at 89.50. And if that gets broken, then we'll be looking again right back down in here. And this is what I was talking about earlier on the monthly, that shaded area. That's where I would expect the price to go if it breaks lower than this consolidation area here. So again, above the market, below the market, we got our levels, we know where they're sitting, we know what they'd be reaching for, and we have to go off that. At the end of the day, we don't know what they want to do with price, right? This could be a fake out. This could be a trader's trap. This could be everyone dogpiling in on this. Everyone get long USD. They're going to take this thing and it's going to start screaming past these highs up here. Yeah, that's one scenario. The other scenario is they goat people into doing that. Everyone gets long. They jam all their money in there for the market makers just to basically turn the US dollar the other way, stop everybody out, and soak up all of that liquidity that everyone threw and injected into the market because they thought this was the next big bull run higher, right? So that's sort of what we're looking at. But I'll be watching this week because I think we could see a little bit of action happening. And again, this broke out nicely, so it's really nice to see that it's finally out of this damn consolidation range right here. That was a very long time in there trading, and it kind of felt like forever, but we're finally out of that and convincingly broke to the upside as well too. So, like I say, I am looking for this to continue higher, and this short-term high in here, and I'll just drop down to an hourly, just so you can kind of see, is sort of what I'm looking for right in there. So not too far away. We're only a few pips away from that right now. And I'll just maybe zoom in a little bit if I can. Yeah, good enough. So, whoops, no, that's not the right one. We are exactly from the middle of that range. We're only about 22, 25 pips, give or take, away from that. So we could easily hit that in a day's worth of trading. I think they're going to go up there. But I think before they're going to go up there, I think they're going to come down and take out some of the liquidity for Tuesday. Trading. You see how it's creating a nice tight range in here? I like to see these nice tight ranges. What they like to do is they like to build up sentiment, so you know, people going long, people going short. If I'm going to go long, most people will, especially retail traders, will come in and they'll jam their stop up under here. What's the most logical place for someone to put their stop? Well, underneath the first swing low, right? So if price goes lower than that, they think, oh, they're going to sink the market today. And all they do is just basically bring it down, and price rejects, grabs their liquidity, triggers all their stops, and then they run the price higher up to this level that we're talking about here, okay? So if we are, and you see here, you see what they've also done here, that just created nice sort of equal highs up in here as well too. That's definitely going to be targeted. So I think they're going to come down a little bit first, though, trading today, and I would expect them to probably come down. See this small little consolidation area right in here where they traded up and then traded back down? It could be a very, very, and basically just sweeping these lows right here. So that'd be about 10 pips from now. So if you start to see price running down real quickly, I'd expect them to run 10, maybe 15 pips lower under the market right here, gathering up all the longs, and then I would expect them to send price higher. This was Monday's trading, so price opened up, traded softer a little bit. It gapped a little bit too from Friday's trading. You can see here, and it filled that gap in and then just exploded to the upside, create a false ceiling right here. Everyone's thinking this is resistance, resistance, resistance. They dropped it lower, traded back up, and now they've been sitting in a consolidation pattern. I believe what they're going to do is they're going to drop down, grab some stops, and run it higher and blow everyone out who's going short up here. Okay, so that's, I think, what's going to pan out for the London session. Excuse me, the London and New York trading into Tuesday. So if we look at last week real quickly, they really haven't came down to scoop up any of the liquidity under the market. So anybody getting long on this has never been in danger of them running their stop. Maybe right here, very shallow, but they still didn't even come lower than that, the open candle there. So I've got this little arrow right here just to delineate basically the fact that there's a ton of liquidity resting under here, which is why I think they could come back down and retest the highs of this consolidation area. I'm going to get rid of this day divider here. Ignore this wick right here, because this wick is just this particular broker's feed. This actually doesn't really exist. Price did not trade higher than this small consolidation area in here way back then. So just ignore that. But I'm going to put a level on here, and I think realistically, you can see the area confluence in there. You see how price came up, and that comes in at about 90.60 to 90.65, you could call it. I'll just put that on there exactly, 90.65. And I'm going to change the color just so we all know what we're talking about here. Okay, so what I think could happen, I think they'll, again, continue to push this up. Now, Tuesday could make the high of the week. I mean, there's definitely no qualms about that. We're almost right there. If price starts pushing higher and closes higher than that line, you know what I was saying before, we're going to run higher, and I think these highs are going to be challenged. If it doesn't, however, though, if it does reject, they could take it back down, and there's a pretty big area of confluence right in there. You see how many times price has stayed in at that level? It went down 1, 2, 3, 4, 5, 6, 7, 8, 9, about 10 times in this area here. Same sort of thing back down in here, where you can see the next area of confluence was this level right back down in here, the middle of that consolidation range. They really traded the hell out of it. Could be an area of support if price does decide to reject at these levels and come back down. So again, got to be prepared on both levels. If it goes higher, what are we looking for? Right here, 92.40. If it goes lower, what are we looking for? Right here, 90.65. Okay, and you can kind of get an idea as to what would be a good shot for, you know, a 1 day's trade. Okay, so long story short, if for Tuesday's trading we are bullish, and this isn't the high right here, and so I'll just bring that in. So if last Friday, if that was not the high, and their intention is to continue to push this higher, keep in mind too, there is also, see these sort of relatively equal lows down there? I don't necessarily think they'd have enough drive to do it, but this also could be a potential scenario if they wanted to do it. Just keep in mind, they could come back down in here and just retest off of this tiny consolidation level in here from last Thursday, retest those levels, and then run it higher and really soak up a lot of that liquidity. Honestly, the deeper the retracement, I think, the higher the probability that they could run and really smash through here and potentially even run up to the 92.40 level. So just keep that in mind. If you start to see them do a big retracement and it goes lower than what I was talking about, then you know that could be what they're looking at doing. So it's really anybody's guess this week. I mean, higher, lower, there's definitely logical areas on both sides of it where they could want to take price. So you got to be nimble with your trading, and you got to be very, very reactionary with it. If they start tanking this thing lower and logical levels are getting lost, it means they're going to go lower and lower and lower. Same thing on the other side. If they don't bother to come down and they just keep running it higher, then you've got your levels above, and you know, you can get in accordingly. So okay. Questions on that? Comments, concerns? US dollar index. Do you guys kind of get an idea? Here's that lower time frame. See these equal lows right here? Relatively equal lows. That could be a significant spot. Because again, if I'm long and I get long in this, let's say I get long down here, and they push price up and then come back down, and they just kind of create an artificial support for it, I'm jamming my stop up right underneath here, and then they trade away, just for them to come all the way back down and grab it. Now, the other scenario too here is, okay, keep this in mind. So I'm just throwing out scenarios because I don't know where they're going to go. I do know they're going to go higher, one way or the other. Just, you can be rest assured of this one thing. They are going to go higher, okay? And I think they're going to run it, and they're going to run out this old high. No question about it. And they're going to tag off this 90, 91, 90 level. I think that's going to happen no matter what wherever they end price up at the end of the week, they will tag off of one of these levels for sure. But what they could do is they could come in and create the high of the week in London and push price up into here and reject, and I'm talking it would be in the next probably 4 hours, 4 to 6 hours. I don't know that New York would be the high. It could, but I think London would be more suspect. They run it up, and they basically stop dead right here in the next few hours, and then they sink it. And then their target being, you know, Friday for non-farm would be, you know, these areas here that I had identified on the daily, right? This, maybe potentially this area here, or a little bit higher. Maybe even this wick high here, I don't know. But that could be the other scenario. So a couple of different options with the US dollar. Hopefully I'm not boring you with the US dollar, but it is, if you're trading foreign exchange, it is absolutely, especially with US cross pairs. Now, if you're not trading US cross pairs, then, you know, don't worry about it. You don't have to worry about the dollar index. But if you're trading the majors, you know, Euro USD, pound dollar, US CAD, US yen, you know, US Swissy, you know, whatever. You got to understand where the US dollar is going, because it is the king. So I'm pretty sure that's you all know that. So that's why you got to spend so much time analyzing the US dollar. But we got a couple of levels. Right now, we do know one thing's for sure: the consolidating price, and one way or another, they are going to hit these highs up in here. Whether they do it, I hope what they do is, I hope they drop it. And again, it doesn't have to be under these lows here. It could just be, you know, coming down here and maybe scooping the liquidity under this low here and just retesting. See, there's this small consolidation area right here. Whoops, I don't know what I did there. I'll just drop that on there. But they could just come down and just want to tag off of this area here, and then come in and then run higher. I hope they do this. This would be great, because this would fall in line with my other scenario and ideas for Euro USD and pound dollar. Not so much Euro USD, but more of the pound, which I think is what's going to happen here this week on the pound. So this would be better. I'd like to see this happen, okay? And again, them taking out all the longs. But just keep in mind that the opposite could come to fruition. They could do this, okay? So just bear in mind that even the best laid plans, you got to have a backup, and this could be what their real objective is. So if they start running, and the telltale sign will be if they start running this thing right off the hop in London. So London's been going now for about a half an hour. If they start running this thing right off the bat, then you know these highs are going to be taken first, and I'd be looking for some sort of rejection on the day. And if they get through this, like I said, this big bold solid line here, then look for them to pop their head up above this high here. Okay? So, hopefully that makes sense. Not going to talk about the US dollar, because frankly, it's not much more I can say about that. Okay, moving on. I want to talk about the pound dollar. And I want to talk about the... let me get rid of some of the stuff on this chart here. Don't need that, don't need that, don't need that. Okay. So pound dollar has been very bullish as well. And again, I'll you know, run it out here. Same type of thing I did on the monthly with the US dollar, and we'll just kind of walk it back. You can see it's definitely been in an oversold market down here. Like I was saying, in terms of the RSI, overbought, oversold. This is middle of the range, and typically what happens when price gets to an oversold or overbought market, price acts kind of like an elastic band and it just sort of snaps it back to the middle, and that's really what you can see here. If I were to take a fib from this high to this low, the exact middle comes in right there. Okay, and that's where price spends most of its time. You can see here, consolidating, runs up, just about retests it here, runs up, runs through it, and then spends a whole, years. 2008 to 2000 and middle of 2014, right in that consolidation area, and then dropped it. So I expect them to trade back to the middle of the range. Doesn't have to get back up to here, but definitely back to the middle of the range of this consolidation area. Who knows where it's going to go from there. I definitely think it's going to go higher. This right here, just so you know, this is the Brexit high. So that was 2 years ago, June of 2016, June 1st, 2016, or the month of June. Can't remember exactly when Brexit was, if it was the 1st. I feel like the 21st of June 2016 was when it was. I could be wrong on that one, but I can dial it back in here in a minute and tell you exactly what day it was. But I think that could be the potential target that they're shooting for. So just to kind of come back right sort of in the mean range of where price has been trading for the pound dollar. They're on their way. So what I'm driving at here is it has been a nice bull market, and price has been running up steadily, and I wouldn't expect anything less. I would expect them to continue that. But that continual drive higher to get above this high here. Now where it goes from there, there's definitely some resistance up in this area here. You can see there's a real level of confluence right here. You see how price is trading in here, and all of these lows in here and all the lows here, and they failed to get up to there. Could be a level of resistance at that 150, 100 level. I'll just mark it on here just so it's an even sort of number. Okay. That could be the target if they get higher than here. Now, I think before they get up there, they have to drop price down just a little bit more. And price has just been doing this sort of consolidating thing right here, okay? I think they're going to drop it down a little bit, soak up some liquidity, kind of right where I got this little big X right here. This little big X, this little X here could be a target. And, for all you trend line traders out there as well, too, it could even just trade right off the bottom of this trend line as well. Just keep that in mind. I'm not a trend line trader like that. I don't, I'm just basically illustrating that this is a bull market, and nothing so far has led me to believe that the pound dollar is going to fall out of that bull market. If price comes in and it breaks this level here, let me just take a fib to kind of show you. If price comes back down and really, to be honest with you, this level right in here, this 50% level, I'd be very, very suspect. If they broke that level there, I'd be very, very opinionated that it probably will continue and resume bearish and maybe potentially take out those lows. But I don't think so. And again, just going back here, like, this was really uncharted territory since 1999 for the pound dollar. They've never gone that low before, and then they just sunk it in there. And I think there's a ton of room above it. There's just a ton of room up here, ton of liquidity, and I think this is going to be their ultimate goal for this. I could be wrong. And again, kind of like the US dollar, it could take them 10 years to get all the way back up there, right? So I'm not suggesting that it's going to go up there tomorrow, but if they do want to take it higher, I think they need to come a little bit lower in order to do that. So if we go down to a weekly, and I've been talking about this level for a while, so guys, if this is the first time joining us, then this will be the first time you hear it. They consolidated price in here for the most part, ran it up nicely, and then kind of dropped it down, consolidated. They thought about what they wanted to do, ran it up, and just squeaked. That's what this little blue mark right here is. They just squeaked above the high right there and then dropped it. And I think they're dropping it for a reason, because there's a ton of liquidity still right underneath here. They traded up and back down and retraced, but let me just get off these data dividers. But you can see here, that was the low. Didn't trade off the old consolidation highs. And typically what they need to do is come down and literally touch these highs in here. Now, whether it's this one or this one here, they left it. and they basically built sentiment up saying, well, this is the floor and this is support and price isn't going any lower than here. Well, that's another retail trader's trap. Everyone sits there and thinks price is not going below here. Where's my stop going? I'm going to jam it under this guy here. And they fake you out. They sit there and they test you, and oh, we're not going to go down and take it. Oh, we're not going to go down. We're going to trade higher, and everyone getting in here and dogpiling long. And then they sink the market, and they're thinking, well, that's okay, no big deal, because my line in the sand is right here. My stop's under here. They're not going under there. This is support. Nah. I promise you, before the end of this week, they're going to take this. It's just a fake out. Price will come under here. This low here. This low here. They're almost exact lows. It was, I think, off by like a pip. I was looking at this the other day. The low came in at 137, call it 1.2. The low here came in at 137.11. So they missed the exact equal low by 1 pip on this feed. Now you've got different feeds, obviously, different brokers. You know what? I'd love to know. I'd be curious. You guys chime in if you're listening to me here. Give me the low on this candle here. So give me 2 numbers. Give me what the low is on this candle on, what's the date on that one? On March 1st. Give me the low of that candle. And then give me the low of Friday's candle. And I'd like to see what the varying numbers are. So again, mine are 137.12 essentially, and 137.11. are my 2 numbers. So give me those 2 numbers if you could, if you got a second. I'm just curious about that. But I think what we're going to do here going into today, same type of idea. So the US dollar, I think we're going to push higher, and that will in turn push the pound dollar lower, or it should anyway. And what you really have to do to confirm that is, what's Euro GBP doing? Well, Euro GBP has been pushing up. So the more this pushes up, the more the pound dollar will be going down. Okay, so just keep that in mind. You can see this nice run here, this nice bearish run on the Euro GBP. That coincided with this nice bullish run on the pound dollar. Okay, so I think what we're going to see here, and we'll just zoom in a little bit. They traded up, nice big explosive candle to the upside here, and I think they're just doing a mild retrace here. We could go a little bit lower on Euro GBP. Price may want to trade down even into sort of the this candle high. I wouldn't be surprised. Not too far away. That's only 20 pips or so away, 25 pips away. So we could see that into London. If price starts to retrace, I'll be looking for them to stop price at really at about about this level, kind of right in there, somewhere right in around there. I'll just maybe put a line there, 87, call it 50. That's a pretty nice even number. So we're currently trading at 87.74 on this feed here. So I would expect them to do something kind of like this, obviously, and then we trade higher into the week. So that's what I'm going to be watching for going into London Open here. And same type of idea, right? They've been consolidating the market, keeping it real tight here. I'd like to see them drop it down, scoop the liquidity here and here, and then run it higher. So if they do that, then what we should see on pound dollar is the exact opposite. You can see what they've been doing here, same type of idea. They've been... Get rid of this. This was an idea for the other day that I had last week, and you can see it pretty much came to fruition. Price just didn't trade up quite as high as I thought it was going to go to, but I'll get rid of those. What I'd like to see here is just for them to come in and just take out the highs in here. So this high for sure I'd like to see them take out, and this high. If they get up into this high, that'd be great, but I'm not expecting that one. But basically the exact opposite. I'm looking for them to come up and then drop it. Now the other thing too, sometimes you can see here is what they've been doing, how they've just been running price down. They could just continue to keep running this down and never really let you get in. So that's sometimes what they like to do as well too. But you can see here again, relatively equal highs. ish. Now give me this trend line. There, thank you. That'll be a little bit easier this time. You see that relatively equal highs in there? I'd be surprised if they didn't come up and run those before dropping it. And where I think they're going to go on this is I think they're going to come back down in this consolidation area right in here. This low here, and thanks guys, I appreciate you sending all those numbers over. Nobody did it, so I don't know if anybody in here is paying attention. Let me send out a couple more invites here, hang on. Sorry guys, just give me 30 seconds here. I'm just typing something out. Okay. Yeah, so where was I going on this? So I'd like to see them just run price higher just a little bit and then sink it. And the target I'm looking for is 130, basically 136. 13600, and we're right now at 137.50. That'd be a nice 150 pip range. Could easily do that. Pound dollar can easily do 150 pips in its sleep on a nice big range day, and so that's sort of what I'm looking for. Now, what would negate that is if we take out this high in here and we start running above this guy, and actually I should say more so these guys. And this is for Tuesday, okay? I'm just talking about Tuesday. Later in the week, you know, so what I'm basically saying is if price gets higher than this line here, you can expect they're going to want to trade it back up into this consolidation range and rebalance price up in here, okay? So that would obviously negate a short. And to be honest with you, from here up there, 870 pips, you know, it's probably not going to... If it does that, it'll let you know, right? I mean, and these highs in here will start, you know, they'll rip through this one, this one, this one, this one. And if the price starts to get above this guy here, you know, hold off on your short ideas until, you know, you see exactly what it's going to do. But if it gets higher than this line here, then they're probably going to want to take it higher. And then maybe what they may do is use the rest of the week, you know, something like this. Oops. To trade it lower, and you know, this level down in here that I was talking about could be the target for the end of the week, so not just necessarily for Tuesday, Wednesday. So anyway, that's kind of what I'm looking at, but I'd like to see them run price up a little bit higher than what it's at, and then to sink it. So that's sort of what I think could ensue for the pound dollar. Or the opposite is true, I guess. If they run lower and then start rejecting and then want to rip it higher, that would obviously be the sort of deciding factor as well too. So anyway, questions about pound dollar? That's sort of what I'm looking for, and kind of a muted session so far. I mean, London Open is just getting started, but it's definitely not really a whole lot going on right now. Euro, same idea. And Euro, okay, so this is what I wanted to define. So both of them. Pound dollar failed to take this low here. Basically left this sort of gap in price right here. And I think that's going to be a draw on it. Whereas the Euro, they got all that. So basically the same charts minus the consolidation in here. But you can see the Euro, right? Big bull uptrend market, you know, on the yearly, or sorry, on the monthly. You can see here, not necessarily as deep of a discount market that, or oversold market that the pound dollar was in. As you can see here, the Euro really had a deep oversold market down in here. But this is basically the middle of that range that we're trading. And so I'm just going to take the low to the high, and we're literally right about the 50% level of that whole big range right there. So I still think they're going to go higher on the Euro, only because it broke out very convincingly out of this consolidation range in here, and prices steadily been climbing higher. I think it's going to keep going higher. And now that these areas here have been tagged off of, I think they've soaked up all the liquidity under this consolidation range, and they're going to jack it higher. But I think what they're going to do is they're just going to consolidate this pair, honestly, for the next little while. And if you look at it, look at the pound. So I'm just going to run down to a weekly. So Monday's trading, Friday's trading, okay? Thursday, Wednesday, Tuesday, Monday. Consolidation. This is a consolidation. This is not really a trend. Yes, price did meander lower, but they really took their time and they weren't in a big hurry to get there. So they were consolidating this market and building up positions while they were letting the euro run. You can see this, the euro, Monday, Friday, Thursday, Wednesday, Tuesday, right? Monday. So this is where the last week started off, and they were steadily dropping this market nicely all the way down Monday through Friday. And again, the pound wasn't doing that. It was dropping very, very slightly, but it was more consolidating. And then Friday they hit the big number, and that's when they finally jacked the price down. So I think the pound dollar still has some room to go down, and only based on this, because the Euro USD has fulfilled its range. They could still take this thing down a little bit further. There's no question about that. You know, there's some area kind of, see this old high back in here, and potentially this old high rate in here, this small consolidation range in here. That could be a very, very strong draw on price. It's 190, you know, 190.60, somewhere in and around there. That could be potentially where they want to take price, you know, which is fine, and they could get down there. But I think the focus is going to be the pound dollar, because there's still a couple hundred pips left up for grabs if they do want to come back down to this consolidation range here. You know, 160 pips, right? So now that could be a nice range, whereas the euro has mainly completed that range. So that's the only reason why I think I'd like the pound a little bit more, but we'll wait and see. You know, the other thing too I was looking at, it could be a bit of divergence happening where the US dollar was really taking out these highs here, traded back to the consolidation range, did the same thing with the euro, right? Consolidated, traded back down to these ranges in here. So essentially the US dollar and the euro USD have completed their ranges, whereas the pound dollar had not. And what I was thinking, if they don't take out the low here, that could be the divergence and the catalyst, and that would basically mean that the trade is going to be in the pound to the upside, and this thing is going to scream higher and basically make millionaires overnight. Not overnight, but, you know, in a year type of thing. So that would be a big, big mega trade. Anyway, that's the pound dollar. So we kind of got some levels that we're looking at there, and it's really nothing going on right now, nothing too exciting in price. So, you know, just watch this. You know, I'd still like to see them start to take this higher, and I'd like to start to see them do it before they took this low here. That would be nice. See how they haven't quite taken that low yet. Retraded back down to it. I can't get that as a straight line, but you see what I'm driving at here. I'm kind of hoping they start running it higher just to grab these levels, if that's their plan. I mean, they may just drop it from here, of course. 1 second, guys. Let me just real quick reading here. I'm just doing some quick calculations just on the fly here. Give me 1 second, guys. Could see a run above these highs here. I'd like to see them just come up sort of about 10 pips above that high there, scoop it and run lower. But again, the other scenario could ensue. They could just, it could be one of those days where they just right out of the gate, London Open, and then just start sinking it, sinking it, sinking it, and sinking it, and they never let you get in. You know, in that case, all you'd have to do is just wait for them to retrace and to a logical level, like right here. If they ever did retrace back up into this level, like let's say they just kept dumping the market here. If they ever traded back up, I'd be looking for them to retrace back up into here, and then I could get short in there. But ultimately I'd like to see them start to run prices higher from here. You know, maybe even build a false floor in here and then they jack it higher, grab the stops, and then run it lower. That'd be great too, but you'll just have to kind of watch price on here. I don't want to, I want to hesitate and not put out any levels on this, because I just, you know, you just never know sometimes. And I don't want to make the wrong call on it and have somebody go in and you know, lose money on it or something like that. So, but I think that is the target. Now let me just look at here. So this was the high on Monday. Sank it down. And we're actually literally right in the middle of this range. So far the week high to the week low, you could even say body to body. Look where we're trading, right at that 50% level. So price on the week opened up, chopped sideways, slowly ran higher, created a high, traded back up into these this small consolidation area right here, dropped. And nice little drop, not huge. I think it was 60, 70 pips, so nothing huge. And then just kind of slowly came right back up. Hadn't retested the high yet, and been just straight sideways ever since yesterday's close. So we're right at the middle of that range. You know, price could trade higher, could trade lower right from here, and you'd be right either way. So hold off on this one. Watch for price. Like I say again, I'm looking for them to come up here and take the liquidity above here and then drop it, but they could just start sinking it. So that's the other option. Anyway, keep repeating myself, repeat and repeat here. You get the idea. And the big thing too is going to be this as well. So the Euro GBP, I think they're going to take it higher. If they start running this higher, it means the cable is going to go lower. So watch for that. US CAD sitting in a tight range right now. Not a ton here to discuss. I think price eventually will go lower, but we could run up and want to take out these highs in here before it does. So just bear that in mind, especially if we get a spike on the US dollar. So if the US dollar spikes up into here, then we could get that spike in the US CAD. As well too, just taking out these interim highs here and potentially even here. Keep that in mind. Ultimately, I would like to see them trade this lower, but just bear that in mind. Aussie dollar, anything happening here? I was mentioning that there was some news coming up for the Aussie dollar, and that was about a half an hour ago, I believe. Just do a quick refresh on the old Forex Factory. Yeah. So it was about a half an hour ago. You can see here, pretty muted. That was the news. Nothing too exciting. Just basically taking stops above and below the market. Now, ultimately, Aussie. You know, this should continue to run lower. As the US dollar is pushing higher, the Aussie should be running lower. And you can see here it's been dropping off nicely. Had a slight retracement in here last week, and then Monday has dropped down nicely, and then Tuesday now it's you know, like I say, just kind of slowly starting to run a bit higher here. But so far been down on the week, and I wouldn't expect anything. I would expect them to come in and potentially run this low right here. If you go out to a monthly, price has been stair-stepping nicely above. But I think there's a ton of liquidity under here that they may want to shoot for. And again, especially if we see that bullish move on the pound or on the US dollar, they could want to drop Aussie down a little bit lower and scoop up some of this liquidity before they run this higher. So just, you know, bear that in mind if you are an Aussie trader. Obviously, you can see, you know, you got a nice trend line happening here, and you know, all is good. If you're a trend line trader, no issues. It's just retesting. Everyone's thinking about getting long. Lo and behold, though, I believe what they're going to do is they are going to scoop the lows under here and drop price down a little bit lower. And I wouldn't be surprised if this small consolidation in here was retraded too. So just keep that in mind. If you are an Aussie trader, I wouldn't get long yet because they could dump the market. But good news is, look at this. There's almost perfect equal highs up there. They got priced by a pip or two right here before they sunk the market. So definitely a big area up here, big flashing indicators up here saying I think they're going to run price up into this area again, but I think they could want to scoop the market a little bit lower before they do. So just keep that in mind. Crude oil. So I don't know if any of you follow me on my Twitter, but I did post an article on Twitter. Sentiment is brewing that crude oil could trade much, much higher. And even, you know, sooner rather than later, we could be up into the 70s level, which isn't too far away. I mean, we're trading high 60s here right now. So, you know, 72 to 75 could be very, very real possibility in the next short term. So that article that I just posted actually is talking that oil could even head up into 80s, and, you know, even $100 barrel oil wouldn't be such a bad thing. It's not necessarily like that market is overpriced. I saw a tweet from some analyst who was saying, like, $300 oil. That is not going to happen probably anytime soon, so don't get your hopes up. But I do believe they are going to run oil higher, and only because of this. I mean, look what they did on this. I mean, they just, you know, sunk the price down here. Again, I'm on a monthly, so they sunk price down to an oversold market, and they've been ripping it higher ever since. And I think oil's natural, and again, same type of idea, right? You take the low to the high of where we're at. I'm not including the wicks in this, and like 50% level, like that's where oil seems to be the market price of oil, and that's where it's been spending the majority of its time in the past, you know, 10 years. This chart only goes back 10 years, but that's where they've been spending the majority of their time. And anytime they get to, you know, 150 or down to 25, they've snapped price back to the middle of this range. So that's where we're headed. Make no mistake, oil will go higher. Now, in the interim, right, we could see what I'd actually like to see in oil. And I don't know if you guys are oil traders or not. You can make a pile of money trading oil if you know what you're doing. Don't trade it right now. It's in a consolidation range. This is garbage in here. You don't want to get, because you'll get chopped up in these markets, especially in oil. It's $10 a point when you're trading on the contract, trading one contract. So I want to see them drop price. You see down here, you got a couple of equal lows in here on the daily. This one comes in at 67.11, and this low comes in here at, oh, we just had it, 67.09. So they actually failed to scoop the low in here. So there's a lot of liquidity resting right underneath here, guys. And they basically have been creating an artificial floor. Everyone's thinking that's support. It's not support. They're going to run it, and I think they're going to run it down and then rip it higher. So let's just look at that on an hourly. You can see here, this is the past 2 weeks of trading. There's been nothing on crude, nothing that I like trading crude oil. But as soon as they start to come down and trade underneath these lows here, I believe we're going to have a return back to a more balanced market. And 67, no, I don't like 67.30. It's more like right in here, kind of where, like, see the old high of this candle here? I'd love it if they return back down to that. And it also coincides with you know, a couple of these old highs back in here as well too. So they could want to trade back down to those levels there, and I think they're going to do it here. Crude oil inventories are on, they're normally on Wednesday. Let me just double check. Non-farm, yeah, they are. They're on Wednesday again. So I think that's what they're going to do. They're going to come down and they're going to scoop these lows. So if you are a crude oil trader, don't buy it yet. Wait for price, and I wait for it to come back down to this line here, which is 66, you know, call it even 66.50. That would be a great area. So I'm going to put that up on the chart here. That's my call going forward. I think we're going to do one of these, and, you know, may not happen today. They may wait till Wednesday, but I think this is what they're going to do, and then they're going to scream this thing higher. So watch out for that one, guys, because that one could be happening here. So that's basically about all I got to talk about crude oil, because it's really, again, it's just been consolidating, really been consolidating actually since in here. Price hasn't really moved out of this range from about 65 to about 68, 69. So it's kind of been ugly trading it for the past, I'd say, about 20 days. I haven't really been doing a whole lot of crude oil trading just because it had the nice break to the upside here that you could have gone in, that I called. You see this X under here? I said they're building up positions in here. They dropped price quickly and then smashed it higher. That's a telltale sign. The quicker they drop it, just means they're gathering up all the sell stops, and the quicker they run away, it just means that the further away they're going to push price, and they're not going to allow anybody to get in on it. That's their whole design. So just keep that in mind. We could see that same thing happen. They could smash the market down and then rip it back up. So just watch for that. Waiting for orange juice to come back to a buy level here. I think we're going to go up much higher, but I don't want to buy it here. I want to wait for it to come back down. So if you're an orange juice trader, I've talked about that several times. The other big one was sugar. Look at this move on sugar. I called this here. Now, I'm waiting for a retracement. They're really consolidating the market here today. This was today's trading, Monday's trading. This was Friday, Thursday, Wednesday. Wednesday created the low. They dropped it Monday, Tuesday, Wednesday of last week, and then they've since been coming back up nicely, and price just tagged beautifully just off of these lows right in here. So I want to see them retrace it. I want to see them scoop these areas in here. And again, same type of thing happening, right? You see these equal lows in here? So I'm just going to drop down to a 15-minute. See that, guys? Very, very significant. Come on. Give me this. Thank you. There, right? This is, hey, this is the floor. This is support. We're running price up higher. I think they're going to come up. They're going to sweep down. They're going to scoop it, and I think they're going to come back down to this 1135 level. And maybe a little bit lower. You know, they could come back lower, but they did a bit of a job of running the stops in here, so I think they're going to come back down. They're going to sweep it lower quickly. This would be sort of be a level that I'd be looking at getting long in, and then I look at this. I mean, if you guys haven't looked at the sugar market lately, have a look at that. Equal highs up here. That's where my target is, and I believe that's where they're going to be taking it. Again, not going to happen tomorrow. You know, it took 3 days just to run this tiny little range here, and so it's going to take a while to run it up there, but for the next few months, for sure, could be a very, very good trade. But I want to see them trade lower first. I do not want to buy it here. You kind of get those confirmations if that happens, and I think that's what we're going to see here tomorrow or Wednesday. It might even wait until after non-farm. They could just consolidate the market all for the rest of this week, wait for non-farm payroll to come out, and then rip it higher. So we'll have to watch for that. But that's about it for commodities in a nutshell. Bitcoin, I mean, I don't think I need to say anything else about Bitcoin. They're going to drop this market, and they're going to take a lot of people out, and they're going to drop it under here, they're going to drop it under here, and then they're going to drop it under here. So if you're a Bitcoin trader, just keep that in mind. They could trade up to this level in here, just keep that in mind. And then once they drop it down and sink it, though, this is going to be the first target, this 12,000. That's going to be the big one on the radar screen. And then ultimately, I think they'll push it higher than 20,000. I'm very bullish Bitcoin long term. I think cryptocurrency is the wave of the future, and I think this is all monetary supply. This is it. I mean, the digital age is here. Make no mistake about it. We absolutely have. Yeah, and you got to think about this too. I'm just kind of rambling on here, guys, because I'm waiting for the market to kind of pick up a little bit, but have you ever thought about this? You know, when was the last time you actually had paper, physical paper money in your pocket? I mean, it's more of a pain in the ass than it is a convenience. Because then you gotta, you know, carry it around, physically carry it with you. You know, you gotta get change. You buy something, you gotta count out your money. You gotta get change, get it back, walking around with your pockets jingling all over the place. And I mean, other than the flash appeal, you know, and walking around like a big baller with, you know, a big pocket full of, you know, wadded up cash, there's really no necessity to having physical paper money. So you got to look at all of the, you know, the tap conveniences on your credit cards, on your bank cards, pay by phone, pay by, I've seen an ad, you can now pay by your watch, for God's sakes. So, I mean, there's just so many more conveniences out there to pay, to buy things, to purchase goods and services than paper money. And I think the natural transition is going to be, well, you know, we've got this national currency, whether it be the Canadian dollar, the US dollar, the euro, the pound sterling, the yen, the whatever. It'd be a very easy I shouldn't say easy. It'd be a very natural transition for them to start creating their own cryptocurrencies and their own blockchain and start labeling it, you know, this is the new yen, you know, this is the new US dollar, and it's all blockchain currency, crypto based. And I think that's where it's going to go. And again, mark my words, the future is now. We are there. The digital age is here. AI and you know, the amount of computer processing capabilities that we're about to see in the next short period of time is going to be absolutely mind-blowing. And I mean, all the stuff that they're doing right now already, it's just, I didn't think I'd ever live to see some of it. And where that's happening, and it's happening very, very quickly. So, mark my words, I think cryptocurrency, I think this is it. Now, what's going to be adopted as the main currency, you know, that's anybody's guess. I mean, it may not, Bitcoin's the big one right now. It may not be Bitcoin. It could be Ethereum, it could be Litecoin, it could be some coin we've never heard of before that hasn't been invented. But I think that's, you know, I think that's where we're headed. You know, it's a digital age, and why the hell would you have paper money? And then again, like I say, now that all of the countries and everything are able to share data more easily, conveniently, and quickly, you know, why would you not start rolling a few of these currencies together? You know, you look at something like the BRICS, for instance. You know, you got Brazil, Russia, India, China, South America, all forming their own sort of little, you know, banking system, and eventually, China's done it. They've bypassed the petrodollar. They're now buying crude oil in the yen. Guess who's going to follow next? Russia's going to be next. Brazil's going to be next. South America, India, they're all going to start doing it. And what's to stop them now from saying, well, you know what? Maybe the next big currency that we're going to start trading in is the yen, and that's going to be the next world reserve. And then again, like I say, just the whole crypto theme is maybe they just start and just say, let's start backing this now off of blockchain theory instead of paper money and what we have in our, you know, vaults and what we've got, you know, whatever we can print, you know, and then they just start making it all digital. So I think that's where it's headed, and I don't think that's a far off future. I don't think that's 50 years from now or you know, 20 years. I think it's like in the immediate future. I think in the next probably 5 to 10 years, we'll probably be seeing that. So just, anyway, that's just kind of my ramblings on Bitcoin, right, and cryptocurrency. But I definitely think they're going to smash this market down first and then run it higher, just to kind of clear out all the suckers. You know, everyone's sitting here thinking, well, I'm going to hold Bitcoin forever. Go ahead, but you could really see your profits eroding. I mean, if you got in up here, if anybody got in this run up here, or even this run in here, you're already underwater. And they're just going to keep applying the screws to you and applying the pressure until you eventually sell, because you don't want to lose any more. And then that's when this is at an absolute bottom and nobody wants it anymore, and everyone's written off Bitcoin, saying it's garbage, it's never going to go higher, you know, and it's been at that for, who knows, a couple of years or a couple of months or whatever they're going to do. That's when the big money will step in and they're going to smash this thing to the moon. So anyway, that's just kind of my thoughts on Bitcoin. But cotton, cocoa, copper, etc., etc., etc. All the C's are covered. Don't want to talk about any of those tonight. So that's pretty much about all I wanted to talk about. New Zealand dollar got a signal off last week for our members. Didn't really do a whole bunch. We ran about 30 pips up, and then the market started to fall off. So not really a whole bunch there to discuss. It's, you know, basically following in step. I was hoping we were I was actually hoping we were going to get a bit of a retracement on it. So I'm not always right, guys. You know, just keep that in mind. So obviously you got to do your own due diligence when you're analyzing charts, but you know, I can be wrong sometimes. I was hoping that this candle here would have come back up and tested these lows in here a little bit higher than that, but instead, obviously, Monday's candle just shot right down, and we're now going to start looking like we're going to test the highs in here and potentially even go lower. And again, that just kind of falls in line with whatever the US dollar is doing. US dollar pushes up, this pushes down, and circle of life continues. So, with that being said, let's go check out the pound dollar and see if this has done anything as of yet. Not really. Not a whole bunch to talk about here yet. Just kind of slowly doing its thing. So, a little bit of a slow London session. This was a bit of a nice run. If you could have got a high in there, you might, sitting about 17 pips, 5 hours later. Big trading day. We got to wait for some movement to happen. News-wise, there is some pound sterling news coming up at 4:30 a.m. New York time, which is in about 3 hours from now. So that could be just when we're going to see the markets run. So I'm definitely not going to sit on here for the next 3 hours. I'm going to actually wrap this up, I think, right about now. I've been on here rambling long enough. You guys have got my ideas, my thoughts on the market. Again, if you have any questions, comments, concerns, something you want me to look at, if you got a chart up that you want to get a second opinion on, fresh set of eyes on, by all means, throw it in the chat here and I'll do it real quick. But if not, I'm pretty much going to call it a session, I think. I'm going to be watching the pound dollar here going into the rest of London, and that's really it. So like I say, Euro's been trading nicely, but since Friday they really haven't gone anywhere. Since Friday of last week, they haven't really gone anywhere. They could start really putting the screws to this now, though, and dropping it a little bit lower, obviously. But the last week was trading. Pardon me, big yawn there. Last week was the euro trading, and that's when we got in all of our euro moves. Was last week. So I'm focusing in on the cable this week, I believe, and just because of this is why, because they consolidated price on the euro. Sorry, on the cable while they moved the euro. And I think it's now the cable's turn to drop. So, well, you know what would be awesome? I'd really love it if they actually ran it all the way up to here and tagged off of these lows in here and then dropped it. That'd be awesome. But I don't think we're not that lucky. I don't think we're gonna get that. I think we're just gonna get a return. I think it's gonna run up above these highs here and then drop. So that's what I'm watching for. And that's about it, guys. Oh, sorry, I got Travis. Okay, what's up, Travis? Thanks for hanging on thus far. Okay. Pound Swissy. I'll be honest with you, bud. I have not looked at a pound Swissy chart for God knows how long. Hoping it's a good morning plan. Well, let's see what we got on the pound Swissy. Let me open up a chart for you. Okay, so here we are on the monthly. I'm not going to spend a ton of time on this, Travis, but I'll give you my sort of overall thoughts real quickly. Couple of levels that I see coming into mind right now. We're definitely coming up into some resistance in this area right in here. You can see these lows that have been created. Very, very high area of confluence in here at this 138.10 level. 138 to 138.10. Very high level of confluence there, but you can also see here we have this market is very, very oversold. You're looking for the lows to, that's not what I wanted to fib. You look at from the highs to the lows here that were created, and literally the low was created in February of, what is that? February, whoops. No, this is 2016. Sorry, this is October, November, right, December, January. So 2017, into 2016, into early 2017 created the low, and so far it's traded nicely off of that. So these areas in here, although it may offer some temporary resistance, I think eventually they will smash price through. And if you look here, you look what they've done here, again, same type of idea. there's a lot of liquidity sitting above these levels in here. Relatively equal highs up in this area here. So if price gets through this level, and I'll just dial this in just a little bit here. And really, we could see a bit of a retracement, but I'll get to that in just a second. But you see in here, they really just poked up and took the liquidity in this one section right in here, and then they've smashed price back down again. So that is definitely an area that I think they're going to take price, and it may not take too long to get up there. I mean, that's a long ways away. It's 2,000 pips away, obviously, but that would be a nice target for, you know, the summer months in the next like 3-4 months type of trading range. I'd definitely look for that. So overall, definitely bullish on the old pound Swissy. They came down in here. I'm just sort of looking below the market here. They came down nicely, created a bit of an artificial floor in here, just poked down lower, ran the stops, and then ripped it higher. So that's definitely a good sign. They returned back down to the tops of the consolidation area and again expanded off, came down one more time, tested the old highs and expanded nicely off of that. So going forward, we're looking at this here now, and I'm assuming, Travis, you are long. I'm hoping you're long. You know, long, you know, overall, higher time frame long, obviously. Even in here, they ran price up, came down, took the liquidity out of the market, exploded back up, creating sort of, you know, the ceiling in here. They came back down, traded off of it, traded up, and now it's been trading a little bit softer. So what I want to do, I want to take a fib from this low to this high, come down in here. Now you see the 61% retracement level. This could be a level that they want to hit before they take it higher. So just keep that in mind. This could be the low. All right, like they definitely traded price in here very, very efficiently. And let me just zoom in on this just for a second here. Look at some levels in here. Very, very efficient trading in here. Well-balanced ranges. Yeah, I mean, there's really nothing in there. I'll be honest with you, actually, they may not drop this down at all. This could be Monday here. This could be the low that was created. So if this low gets taken out, then I would look for them to return back to, you know, potentially this range in here, 135. You know, 135.50 to 135.20 area if this low gets taken out. But to be honest with you, they did a pretty good job of trading it in here, so they really have no reason, in my opinion, that they would need to come back down into this level here. However, with that being said, what you need to do is you need to look at the strength of both the pound dollar. Yes, you're bullish and new to trading. Okay. So you gotta probably don't know what I'm talking about then when I say you need to look at the strength. Find the futures contract for the pound sterling and the Swiss franc and have a look at those two charts separately and figure out which one's bullish, which one's bearish, higher time frame. Because then now you got to look at which one is going to override the other. So if the pound sterling is stronger than the Swissy, you're going to get this pair running higher, obviously. Vice versa, you're going to get the Swissy running higher, which means this is going to drop lower, okay? But again, nice bullish uptrend. I think you'll probably find that the sterling is showing strength, which obviously you can see as of late, you know, in the weekly, the pound's been showing some nice strength in here. So going into tomorrow, just because I know that's what everyone's here for, what's going to do tomorrow? The low on, what are we, Tuesday, Monday, Thursday, I think the low on Thursday would definitely be a target if it continues to see bullish price action today. 136.70. I mean, that's not too far away, 30 pips. great little scalp if you can do it. But look, at the end of the day, if price doesn't want to get higher than, have a look. If price doesn't really want to see any inkling to get any higher than 136.80 to 13700, they could want to come back down and tag off of these highs here. But honestly, created a nice swing low here. So price ran up, fell off, took out the stops. If price gets through this level here, then I would imagine that the next level is going to be these highs, and it's going to start retesting these highs up here at 138. So could be a nice 200 pip swing or so from current levels if it does, but I would expect it to run higher. Now just dropping down into the intraday here, couple of equal lows right here that it created. Just be careful before they get up there. You know, actually I'm glad I dropped down on an hourly. Yeah, really have a look at this area here. See how price comes in and has really been trading off of this 136.80 level. That could offer some level of resistance. So just keep that in mind, okay? Watch price. If you are long on this, watch price at this level. You could get a rejection here. Could be short term. I mean, their ultimate goal, like I say, could be up here and running these highs in here for sure. But just keep in mind, if price does trade up and you do see some unwillingness to go higher than these levels here, this could be the resistance that I'm talking about, and they could want to drop price lower. So just keep that in mind going forward, Travis. But I would actually say, just kind of down on a 15-minute, put the day dividers on, have a look at the week. We opened up stronger here. If price wants to retrace back down, and let's say again, let's say you are long, or let's say you're looking at getting long, watch price. If they do trade back down, watch price at 13600. Okay, do not let price go past 13600 if you're long. Okay, so let's say you're long in here somewhere, or you're waiting to get long. Watch price if they want to come back down. I want to see them sweep these lows here and then start to reject and trade higher. But they could come down. What is this? Oh man, that could be a perfect trade. That would be beautiful if they come back down here. I would really love to see this. If this would happen, and just come down and just tag right off of that 136 level, and then kind of do this. That would be a beautiful trade for you, Travis. Have a look at that. That could be an entry for you for the pound Swissy. I don't trade this. I'm just doing a real quick down and dirty analysis for you. But if this thing does continue to see higher prices, I think Monday could have set the low here, as you can see. If price breaks this 13600 level, it could be suspect and it could be running it lower. So that sort of would be your line in the sand, okay? If you're already long on this pair. But if you're not, could be a good entry in here. So anyway, with that, guys, thanks for tuning in. And just so you know, going forward, I'm going to do another trading session, London Open. So same time, same place for me, Thursday. There will be a live session Wednesday morning for New York Open. And Dave will be in here. He'll be doing S&P for all you S&P traders, gold traders, UJ traders. He'll be discussing those markets and going through, gold set. There's actually a couple of setups, big potential setups on S&P and gold right now that you should be looking at. Make sure you come in, check out that, because Dave, when he's on fire, he's big, and he definitely crushes the markets. And I mean, last month alone, I think he netted 200 or 300 pips alone on some of his trades. So just keep in mind, those are definitely sessions you want to check out. So Dave will be live, New York Open at 9 a.m. New York time on Wednesday. This is my last session until London Open Thursday, same time, same place, midnight New York time. I'll be back on, but that will be it for me until the following week. And then Dave will be back on Friday again, doing the same thing at 9 a.m. New York time on Friday, S&P, UJ, and gold. So that's the schedule. That's the lineup for the week. I wanted to get some New York sessions in with you guys. Unfortunately, my schedule is not going to dictate it. I've got a very, very big week ahead of me this week, and I absolutely can't be in front of the charts, unfortunately. So this will be my last day officially on the charts until Thursday, London Open morning, and we'll catch up to you guys then. For all of the members, I will be available via chat, so if you need to get a hold of me for anything, I'll be around, of course, as I always am. Except for Thursday, I will be completely incommunicado on Thursday after the London session is wrapped up. So, okay, I hope you guys have a great week. Members, just so you know, I'm going to be shooting out a couple of signals coming your way here in a few minutes, so watch for those. And I hope you guys have a great day trading on Tuesday. And we'll catch up to you on the next one, guys. Take care.